Hello and welcome everyone. And we are in the fag end of the year 23, and I'm sure everyone are in the festive mood. Happy Christmas and the New Year for everyone. We are at the last verge of filing the annual returns, and it's our endeavor to ensure that we file the annual returns with the correct numbers, correct values, ensure that there are no errors coming up. My name is Venugopal. I'm one of the speakers for today's session. I welcome you all for the continuous learning session, which we've been doing it from last 5 years, 6 years. And it's been our endeavor that we update our participants both on the GST and the technology matters. Today, with me, I have my colleague Jagdish, who is one of the co-speaker and who would be touching upon on the GSTR 9. And the second part of the session would be handled by Tarun, who would be touching upon the consolidation of various data sets, be it Excel, PDF, into one single document, and how we can make the data dynamic. Imagine you have GSTR 2A, 2B, or GSTR 1 Excel files coming month over month. How it can be consolidated on a single click of a button. And the subsequent month data, when it is coming up, how that can be consolidated. We will be going to look at that. Maybe for some of you, you might be getting the bank statements. We will be looking at how to handle different data, right? So with this note, I welcome you all for today's session. And as I mention regularly, this being a knowledge session, I would request everyone to put your questions in the chat. Get your questions resolved as much as possible. At the end of the session, let there be no stone untouched. And if you still have a question which is not resolved, we'll get back to you. We'll be sharing the copy of presentation at the end onto your registered email ID. With this note, I welcome Jagdish to begin the session. Jagdish, over to you. You're on mute.
Okay, thank you. Let me share my screen. Okay. Is my screen visible, sir?
Yes, perfectly visible.
Yeah. Today's session flow is first I will take you to the basic structure of GSTR 9 and 9C, the context of 9 and 9C, and how to report and where to report, what values need to be reported in the 9 and the 9C that we will discuss. And also we'll understand how to report the spillover effects and how the data flow between 9 and the 9C. That will also we will see. And in the end, we will see the recent updates. And at the end, we'll see the tech updates will be taken up by Tarun and Venus. So first we'll see the legal provision. Hope you all are ready with the 990 workings by this time. But just to brush up your workings and all the things, we'll see. First, we will see the applicability. Section 44 requires every person is required to file the every registered person is required to file the annual return except ISD, TDS, TCS person, and casual taxable person and non-resident taxable person. Except these persons, all the registered persons are required to file the annual return. So within what time? As per Rule 80, with, on or before 31st December, every registered person is required to file the annual return. So there are various types of form. In which form, who is required to file annual return in which form? In case of the regular registered person, he is required to file it in the GSTR 9, whereas for the composition dealer, it's 9A. It's a prescribed form, but 9A is not available in the portal. For him, GSTR 4 is the annual return for the composite dealer, whereas for the TCS person, it's 9B. As discussed in the previous slide, for the ISD, TDS person, casual taxable person, and non-resident taxable person, for them, there is no requirement to file the annual return. This is the basic applicability. Now we'll see exemption has also given on basis of the turnover, on basis of the that is aggregate turnover. So if the registered person having the aggregate turnover less than 2 crore, for him filing of annual return is optional. Okay. And the turnover exceeding 2 crore, but not exceeding 5 crore, for him GST 9 is mandatory, whereas 9C is optional. And for registered person having aggregate turnover more than 5 crore, both 9 and 9C is mandatory. So here I am saying the aggregate turnover. What aggregate turnover means? Aggregate turn, if you would refer the section 2, subsection 6, the aggregate turnover means it includes both taxable, exempted turnover, and also the export turnover. And this should be considered on the pan-India basis, not the individual GST-NY basis. So if you come again to the exempt supply, in the exempt supply, section 2, subsection 47, exempt supply includes non-taxable supply. For non-taxable supply also there is a definition. Non-taxable supply means that that turnover which is not liable to tax under this act, that is the GST Act. So exempt supply includes non-taxable supply, and non-taxable supply includes the non-GST supply. So you have to consider the non-GST supply also. Taxable supply you have to consider, exempt supply, and non-GST supply, no supply. All this turnover you have to consider for the purpose of arriving the aggregate turnover. So this turnover have to consider on the pan-India basis, not on GSTN basis. Let's say I'm having 4 registrations in India. One is in Karnataka, and one is in Tamil Nadu, and the other is AP and Orissa. Okay. I'm having the turnover of 10 crores in Karnataka, whereas in remaining all states, I'm having less than 1 crore turnover. Whether there is a confusion and industry that only for the Karnataka registration having 10 crore, I need to file both 9 and 9C. Whereas for the remaining 3 states having turnover less than 1 crore, many of the taxpayers are not filing the GST 9 and 9C. For them also, it is mandatory. So aggregate turnover means you have to consider it on the pan-India basis, not on the GSTN basis. So you have to file for remaining 3 states also, that is Tamil Nadu, Andhra Pradesh, and Orissa also. You need to file both 9 and 9C if your aggregate turnover on pan basis exceeds 5 crore. Okay. Coming on to the 9 and 9C.
Previous slide once. Previous slide. So though at a cost of repetition, I would like to remind everyone that for most of the people, it might so happen that you would be having a turnover, very high turnover in some states, and no turnover, nil turnover for a newly started registrations. So a checkpoint, go to the GSTN, and assuming your consultant, you're filing for someone, go to GSTN, search taxpayer, enter the PAN number. It will show list of all the GST numbers. So irrespective if that respective state turnover, either it is nil or few lakhs, you still have to file the annual returns if the aggregate turnover is exceeding 2 crores. Please note, aggregate turnover exceeding 2 crores, you have to file the turnover for all the GSTN, and as Jagdish rightly said, the definition of the 2 crores includes taxable supplies, exempt supplies, and non-GST supplies also. So look at all the turnover. Let's say a petrol bunk who predominantly sells diesel, petrol, which are kind of supplies outside the purview of GST, non-taxable supplies. Still, you have to file GST having your registered and your turnover more than 2 crores. That's the point number 1. Point number 2, GST or 9C is not like an optional thing. You have crossed the 5 crores turnover, you file only 9C. No, you have to file both 9 and 9C. Lastly, point number 3, 9C, even though it is beyond 5 crores, if you still want to file your 9C for the turnover below 5 crores, you are welcome to do it. There is no restriction and bearing on it. Last point, please remember, if you do not file your GSTR 9 within 31st December, please note, if you do not file your GSTR 9 within 31st December, the values which have been auto-populated on the portal will be deemed as if that you have filed, so those below turnover 2 crores. You can also file it if you feel that some corrections are required. And please consider this is the last opportunity to correct and file your returns. Please go ahead.
Yes. though it is optional, it is suggest to, when you said it is better to file both 9 and the 9C. If let's take an example. If you have availed the ITC on imports in all other ITC, so now you can correctly report it in the GSTR9. Otherwise, auto-populated figures, the GST will be considered as a final figure. So as Venusa said, this is the lost opportunity. So if you want to correct it anything, you correct it through GST9 and the 9C. Moving on to the next slide. So I will see what is the context of 9 and 9C. I will say GSTR 9 as a fact of the statement, because what is done actually that I need to report in the GSTR 9. What the whereas 9C, what should be done? The ideal situation will come in the GSTR 9C, which is first GSTR 9. The turnover on which taxes are actually paid, only that turnover will be form part of the GSTR 9. And the exemption declared, what I have actually declared, and the taxes, what I have actually paid through paid through GSTR 3B and DRC 03. Only those I need to report in the GSTR 9. And similarly, the gross ITC avail and whatever the net ITC availed in the return, only that will be form part of the GSTR 9. Whereas on the other side, in the GSTR 9C, what the ideal turnover I need to report, and what the ideal taxes I'm required to pay payable, and net ITC, what the actual ITC I'm eligible, only that I need to report in the GSTR 9C. This is the key difference between the GSTR 9 and 9C. Moving on to the next slide, you will clearly understand it as I go further. So first I will let us understand the basic structure of the GSTR 9. So it is totally divided into the 6 parts. It is beautifully drafted. The part 1 is all about the basic details. So GSTN number and
Jagdish, sorry. Previously, okay. Yeah, this is important because though I said that this is the last opportunity to avail, I want to take you through with a small example. Let me just take a white page for this. Let's say, imagine that your books of accounts, okay, in your books of accounts, let us say the turnover is 100. Now, what you have filed in your GSTR 9, what you have filed in GSTR 9 is something that will be treated as the final for the government. So let's say what you have taken in your GSTR 1, what has been reported as 80. Okay. But while you have filed in your 3B, while you have filed the values in 3B as let's say 70. Okay. Now, from the context perspective, Jagdish was saying that GSTR 9 is a statement of fact. GSTR 9 is statement of fact. There is no doubt that GSTR 9C will be having the value of 100. 9C is your actual liability that you have to pay, whatever is there in the books that you have to pay. Now, the question that comes up is, should I report 80 in R9, which is there in R1, or 70 in R9, which is there in 3B, or the value which is there in the books? That's always a question that comes up. Now, please note, you should always be filing a value, whatever which is actually paid. What you have paid is 70. Whenever we are saying paid, we are saying that paid in GSTR 3B, or it has been paid using DRC 03. Now, the taxes that could have been paid using DRC 03 or using GSTR 3B, both can be considered. Now, in the current situation, we all know using GSTR 3B, 70 has already been paid. So GSTR 9 can definitely have a value of 70. Now, there is value of 30 which is not paid. The value of 30 which is not paid, you cannot report it in GSTR 9. But now you realize that there is some value which has not been paid, that is 30 rupees. And you are paying it now with the DRC 03. So what goes to your GSTR 9 is 70 plus this 30. 70 plus 30. So you would be reporting the entire value of 100. enter. Jagdish, is the screen visible?
Yes, sir. Yes.
Yeah. So what you are reporting is the entire value of 100. So if you notice, the statement Jagdish made is GSTR 9 is a statement of the fact. What is the fact? The fact is something has been paid through 3B, that is 70 rupees, and something has been paid through DRC 03, that is 30 rupees. So whatever which has been paid only goes to GSTR 9. For some reason, you say, I'm not going to pay 30, I'm only going to pay 20 now. If you say instead of 30, you're going to pay 20, so 70 plus 20, what you will be reporting in your GSTR 9 is 90 rupees. Now this 20, you may pay now before filing your GSTR 9, or right immediately after you submit, you have an option to offset the differential payment that needs to be paid. But payment has to happen through DRC 03. So that value, that the taxes which you are paying would be reported in GSTR 9. This is something one has to be very much careful. So the entire taxes that are reported in GSTR 9 has to get paid. Likewise, when he said on input tax credit, let's say someone has purchased a motor vehicle which is an ineligible credit. But having availed such ineligible credit, you still have to report it in GSTR 9 because you have availed. On the contrary, you made a purchases, you have accounted in the books, but the accountant forgot to take it in 3B. It is there in your 2A, 2B, and purchase invoice is there, books of accounts, everything is there. Since you have not accounted in your GSTR 3B and electronic credit ledger, so it's a credit not availed. Since it is not availed, you will not report it in GSTR 9. So a thumb rule to remember, GSTR 9 is your statement of fact. And even then, we are still saying that there is a last opportunity to correct, because in your DRC 03, if a liability which is missed out, you can pay the liability. If an ineligible ITC that has been availed, you want to reverse it, you can reverse the ITC, because you have an opportunity to correct it and state it. And state what? State always the statement of fact. If you have paid it, you will be showing. If you have availed it, you will be reporting it. So this is what you will be reporting into your GSTR. And this is a context. One should be very clear, because context drives the whole of the thing. If your context is clear, then values reporting, how you are reporting, from where you are reporting, all those will come into the picture. But knowing the context is very much important. Okay. All right, done. Yeah, back to you, Jagdish.
Yes, sir. Yes. So now we'll see the basic structure of the GSTR 9. It totally divided into total 6 parts, and part 1 is all about the basic information. In this, we need to just give the basic info about the GSTN and trade name. And we're coming to the part 2. Part 2 is all about the liability. And this the part 2 is further divided into 2 parts, table 4 and table 5. In that, I will discuss about each table in the later slides. First, we will see the basic structure. And coming to the next part, part 3. Part 3 is all about the input tax credit. Obviously, next to the liability and the input tax credit, obvious thing is the tax paid details. In the part 4, we need to provide the tax payable and paid comparison that we need to provide in the table 4. Coming to the part 5, ideally, up to the part 4, the table will be closed now. But as is a human, so there may be cases we committed a mistake, but rectified in the subsequent year within the period allowed as per the GST law. So those adjustments we need to provide it in the part 5. That is in the table 10. It is further divided into 4 tables, table 10 to table 14, table 10 and 11. There we need to provide the adjustments with regard to the turnover, and the table 13, 14 with respect to the ITC. And in the part 6, government required certain miscellaneous information. So in the part 6, we need to provide the miscellaneous information, that is with regard to the refunds, if there is any demands and HSN details. All the details we need to provide it in the table 6. Now coming to the GSTR 9C. Let us walk through the structure of the GSTR 9C also. It is totally divided into the 5 parts and 16 tables. And here also part 1 is all about the basic information. Ideally, this GSTR 9C will start from the table 5. In the part 2, we need to provide the turnover details. And part 3, it is all about the tax payable liability reconciliation. And then the part 4 is all about the input tax details. In the part 5, there is additional liability that we need to report it in the table 5. Now we'll see about the each table. Please don't be confused by seeing all these tables. By the end of this session, you will have a grip on all these tables. What details I need to report, where to report, all these, and even the spillover transaction, how to report, you will get to understand by the end of this session. Now we'll see what the source of information I required to file the GSTR 9. The primary source of information to fill the GSTR 9 and 9C is the consolidated 3B and consolidated GSTR 1 and your audited financials and your GSTR 2B for 22-23. In addition to this, you also required GSTR 3B of next financial year because we have made adjustments pattern in the current financial year in the subsequent financial year, that is up to the 30th November. For that, you need GST 3B of the subsequent financial year, that is 23-24, up to the October month returns if you have filed on or before the 30th November, and the GST 9 of the previous financial year, because you might have report the transaction pattern into the previous financial year and the current financial year. That transaction you need to remove from the current year transaction, that is from the 22-23. And also, if there are any DRC, if you have discharge liability or reverse any liability, any tax through DRC 03, for that you require the DRC 03 tax payment. And also, in the miscellaneous information, we need to provide the details of refunds and the notices, if any. And that also we need to provide it in the part 6 of the GST. For that, you need the refund claim details and the notice or demand details. So you need all this information. I suggest you, I suggest you use a better software to get all these details in a single click. It will save you a lot of time to retrieve all these details in a single point of time. So first we'll start with the turnover reporting.
I just want to add a couple of points. The friends, so it's very important that when you are starting a work and you want to review various things, so having this information handy is more important. Second, as Jagdish said, having a good software is more important because this data has to be downloaded from the government portal. It's not that the government portal has not auto-populated 9. It has auto-populated 9. Is it correct? Answer is no, because the portal is doing at its best with the information it has, but it do not have the information of the books of accounts. So it's very much important that you compare all this with the books of accounts and reconcile those values before you file. For example, your sales register versus GSTR1, is it correct? 99% it would be correct. There are situations where you might have filed a return, then later someone has raised a sales invoice, corrected an invoice, deleted invoice, some or the other thing could have happened. So you got to still recorrect it and prepare what will be the turnover. Ideally, I should have reported in GSTR1, something could have missed out. So now from now, we will be looking at the process of preparing GSTR9. So go ahead, Jagdish, with the process of preparation.
First, we'll see how to report the turnover. So 9C, this is the table 5 of the 9C. The table 5A, here we need to report the turnover as per the audited financials. And from audited financial, you have to arrive the figure as per the GSTR 9. Turnover as per books and turnover as per GST never match, because books will be prepared based upon the applicable accounting standards, matching concept, and in the applicable various Ind AS. Whereas GSTR 9, the turnover is driven by the time of supply, because of that, the turnover between the financials and the GST turnover will never match. So there will be various reasons. GST 9C form already provided you the various reasons, probable reasons that might be the cause for the difference between your audited financials and your GSTR 9. From that audited financials, you after arrive the figure as per the GSTR 9. These are all the adjustments. That unbilled revenue. Unbilled revenue will be the turnover as per the books, but not the turnover as per the GST. So you reduce, you add back all these adjustments, plus or minus all these adjustments, you arrive the figure as per the GSTR 9. Post this, after identifying this turnover, bifurcate that turnover into two parts. That is transaction having tax implication, that is the taxable turnover and the non-taxable turnover. In the table 4, I need to provide the details of all the taxable turnover, whereas in the table 5, I need to provide the details of all the non-taxable turnover. We'll see what are all the form part of the table 4 and what are all the form part of the table 5. So these are table 4 of the GSTR 9. So now I have arrived at the turnover as per the GST turnover, and from GST turnover, I have bifurcated into two buckets, the taxable turnover and the non-taxable turnover. And for the taxable turnover, I'm bifurcating it to various type of supplies like B2C supply, B2B export with payment, SZ supplies with payment, and deemed exports. On all these, I need to pay the tax. So in the table 4, I need to provide the bifurcation between B2C, B2B export with payment, SZ supplies with payment, deemed export. Like that, I provide the bifurcation in the table 4. Along with my outward supply, in the table 4G, I also need to provide the inward supply on which I require to pay the tax under reversal, though it is not my turnover, because for tax payable reconciliation, it is required. And also any unadjusted advances as on 31st March, that also I need to provide in the table 4F. And the any adjustment you have made from 4B to 4E, that is from B2B to deemed exports, that you need to provide it in the table 4I to 4L. That is, if any credit notes are issued pertaining to B2B, B2B, that you need to provide in the table 4A. Similarly, the debit notes, any upward amendment, you need to provide it in the 4K. Any downward amendment, you need to provide it in the 4L. Here, you also have an option that either you can show it on net basis or on gross basis. Let's take an example. You are having a B2B supply of 100 rupees. And for the B2B invoice, you have raised a credit note of 20 rupees. So either you show 80, you can show 80 rupees in the B2B itself, or else show 100 rupees in the B2B and 20 rupees in the 4I as a credit note. So net turnover will be 100 minus 20 will be the 80. Here you are having an option. Whereas for the B2C, there is no such option. You have to show it on net basis only. Only from B2B experts with payment and SZ with payment deemed experts, you are having that option. Okay. So table 4 is all about the taxable supplies. Now we'll see table 5. As I discussed in the previous, I have two buckets, one is taxable and non-taxable. Now I require, now I need to bifurcate the non-taxable turnover in the table 5. Like zero rated supply, that is export without payment, SZ without payment, supplies on which tax to be paid by the recipient. Let's say, what is this? I am into the GTA business and I have opted that the recipient should pay the tax. So I will declare the turnover in GSTR1 and I will mark the RCM as my recipient will pay the taxes to the government. I am not required to pay the tax. So that is also my turnover. So supplies on, I will not discharge the liability. That's why supply on which the tax is to be paid by the recipient on the RCM basis, and exempted, nil rated, non-GST. Similar to the table 4, you can also, you are having an option to either show it on net basis or on gross basis. That is 100 from 5A to 5F and 20 from 5H to 5K. So here in the exempt supply, nil rated or non-GST supply, earlier you have an option to show all these three in the exempted. Now you are mandatorily to report non-GST supplies separately, and now you are having an option to club both exempted and nil rated in the exempted table itself, the table 5D. So now we have so with this, the turnover got completed. But I might have made some mistakes and corrected in the subsequent year, where I have to report that mistakes. We'll see in the later slide. So before that, it is a summary of what we have discussed till now. The turnover 5-1, that is taxable. 4N minus 4G. 4G is my RCM supplies, inward RCM supplies on which I have paid tax on reversal basis. This is not my turnover. That is why I'm removing my taxable turnover. That is 4N minus 4G. If you see here, 4G is my inward supply, not my outward supply. That is why I'm reducing this 4G from my taxable turnover. So 4N minus 4G is my taxable turnover, and exempted 5M is my total total non-taxable supplies. Okay, this is the 5M. So this combined 4N plus 5M, 4N minus 4G plus 5M is my total turnover, and it includes both taxable and exempted, and any amendments that have made to 22-23 supplies, that also will be part of this, and debit note, credit note, and also it includes non-GST supplies. And if you see that table 5, non-GST supply includes no supply, that also we need to report it in the table 5F. Okay. So what are all the no supply? That petroleum products, HSD, like HSD, and also like alcohol liquor, that also will form part of the 5F. Even though that is no supply, we need to report it in the non-GST supply. Hope it is clear till now. We'll see how to identify the turnover.
Yes, let's take up questions. Let's see if there are any questions in the chat.
Okay, sir. Whether showing credit notes are mandatory in the table 4. You are having an option that either you can show it on gross basis or net basis. As I mentioned in the example, you can show the net figure as an 80, 100 minus 20. In the table 4B itself, or else in the table 4B, you can report 100, and in the table 4I, you can report the 20. Hi, sir, 9C opens after filing of GST-R9. Yes, sir, only after filing GST-R9, you can file 9C. Interest income has to show in the exempt supply. Yes, as per 12/2017, exempt supply is an nil rated. So we have to report it in the table 5.
All right. So again, let the questions keep coming. We'll take it up. So just to summarize, your outward turnover is in two tables, table 4 taxable turnover, table 5 as exempt turnover. And for a quick cross reference, you will be looking at 5N. 5N will be the total of the turnover, taxable and exempted, because in the taxable turnover, there is a 4G, which is reverse charge inward, that gets excluded. So that is something you have got to look at it. So now coming to the important point of it, like how do I find the turnover? Where the turnover is something important. Go ahead.
Okay, sir. Now, identifying of the turnover as per the GST. Supply can be anywhere. It may be credit, of course, credit of the P&L account, and also it also includes other income, and debit side of the P&L account, that may be credit to the expense ledger. It can be also in the asset side of the balance sheet, like sale of the fixed assets, and also it could be in the liability side of the balance sheet also, advances, and outside the financial statements, the stock transfers and Schedule 1 transactions. So from all this, you derive the turnover as per the GST, and review the revenue declared as per the books, and check for any deemed supplies, stock transfers, crosses, recoveries, and also the classification, whether you have classified your outward supplies correctly or not, the applicable rate is correct or not, whether you have properly classified HSN or SAC under correct SSA or not, and also valuation, sale of vehicles. you are having a notification 8/2018 for sale of personal transport vehicle second hand. So that you might have adopted, and also discount or incentives, and also with regard to the time and place of supply provision. You check all these before filing of GST 999 because this is the last option to correct the mistake and to avoid the future litigations. Um, and also you review the debit notes, credit notes, and tax statement if there is any rates and in the 22 in the time of at the time of filing the GST 999. You
I
please
did
check. Yes, sir.
a previous slide once. All right. So, friends, again, some at the cost of repetition, I'm going back. This slide is generally people only look at P&L when we say outward supply. Now, just looking at P&L is really not that sufficient because the sales is something which is important, no doubt. But other income line items in other income is something equally more important. Most of the time, when I realized that looking at various GSTR9s that got filed, the values in other income were reported in 5O of 9C. Either it is reported as 5O of 9C, or some of them has reported under 5F non-GST supply or no supply of GSTR9, or 5D exempted, 5E nil rated. It would have moved into any of this 5D, 5E, 5F of GSTR9 or 5O of 9C as a line item. Most of you, when you get a notice from the audit department or the system generated notice, these are the parameters they look at it. So for your own self, you have to ensure that if you're claiming something as an exemption, like you have received some scripts, okay, that scripts which you have sold SCIS or MAI script, now it is exempt under HSN 4907. So you need to have your workings under which exemption notification you are referring to. Do you find a place of it in 2/2017 or 12/2017? You got to have a documentation of it against each line when you are claiming. It could be as simple as interest income. Even the interest income, you go to look at whichever is the entry that HSN and record it in your workings. Because when the audit happens, when do audit happens? Later, like 1718 or 1819, recently, as recent as a year back, 5 years back, people some from the audit would come up. So very difficult when this happens for someone to track that why was this claimed as an exemption? Why were the taxes not paid? Were these reimbursement taxable? A confusion. Do a proper documentation wherever you're claiming as no taxes. Secondly, when you're looking at the other section, the previous slide ones, when you're looking at the Jagdish previously, yeah, when you're looking at the other section, where is the set off of the expenses that are happening? The reimbursement expenditures generally are added to the value of supply, section 15 subsection 2. But accounting wise, it would have got netted off. So very important that why your turnover is not matching, you got to reconcile it. There is no question that why you should not spend time in reconciliation. You should definitely do it. Yeah. Next slide, Jagdish. And when you are looking at the turnover, certain things are a little dicey. Whenever you have any doubt, you can still look for some case laws, advanced rulings. Not necessary that it would be applicable to you, applicable in case, but at least you have some support why you have not done the way like the government is expecting to do it, right? That is more important. Like a proprietor might have other income. A proprietor might have other income while he has filed his income tax return. System is going to do a comparison. System do have the data of the IT 26AS, TDS return, TIS, AS, bank statement, and 2B. All this data is there with the system. What is the other income proprietor is having? SB interest income. You are filing the return basis the trading account, P&L account. While in the income tax return, you would have considered other source income, rental income, which has not been considered for the purpose of GST. I would recommend you go ahead one step further and look at these incomes which are lying elsewhere. And it might also be a situation where a credit notes that have been given to you, like the credit notes which has been given is finding in other income. You might be thinking that, okay, it's a credit note given by my supplier, and sometimes it's a financial credit note. He hasn't even reduced his liability. Because he has not reduced liability, you are saying that I will not reduce ITC. Now there's a two different parallels. Reduction of ITC is something different from adding to output liability. Every receipt is not a supply. GST is supply based transaction. Like you received a credit note from your supplier because there is a reduction in the price, and he is asking you to pass it on to your customers. So the discount given to the customers is offset by the suppliers. Those incomes would be taxable. So you got to take a calculative note as to why you are doing whatever you are doing. This is very important. And the biggest thing which I see people not doing at all is computation of interest in delayed reporting. Overall turnover is matched, but month-wise, if I see when I have to pay versus when I have paid, this working is hardly done, and interest liability, if at all, there is hardly computed. And also, if you look at your other incomes, sometimes you have forex gains, a substantial gain that would have happened when you made a sale. The exchange was at 82. When the conversion happened, it was 84, possibly. But you still have to have those reconciliations very much intact before you finalize. It's like the next Jagdish is going to explain you. Given that these are the items that are there, you got to start finalizing the turnover and build your reconciliations, different types of reconciliations. But even before you end up there, you have to first build what is the number that I am going to basis which I am finalizing. That's very important. Deriving a base working sheet saying that yes, this is the turnover for me for this year. Whether I have paid, not paid, is a secondary, but deriving what is my turnover, taxable, not taxable, is very much important. Yeah, please go ahead, check this.
Okay. Now the reconciliation. You have to do the multi-dimensional reconciliation. That is the books versus 1 versus 3B, 3B versus 1. And in addition to this, you also need to do the reconciliation with your e-invoice and the payable reconciliation also. And reconciliation for turnover, the interest rate and interest rate. If you have multiple GSTNs and prepare the registration-wise trial balance and the tax type, and also you prepare a detailed report, a detailed statement with rate-wise and the type of supply and nature of the supply and the party-wise also. If it is B2B and otherwise is a B2C. Prepare a detailed statement of turnover so that it will help to easily file the GST 9 and the 9C. And also you reconcile with your income tax. Income tax 26 days. And if you see the TCS under 206C, you can find the scrap sales rate, and also for the supply of services, you can and see if any service turnover with respect to the services, and if there is any sale of immovable property, that also you can find it in the income tax TDS and TCS returns, as well as in the TS and AIS, because department is issuing notices based upon the 26 years turnover. So in order to defend all the things, you prepare a reconciliation with the income tax also. And coming to the book turnover, whatever the turnover, as per the audited financial, if you are located in the multi-states, then you prepare the financials, each GST each state-wise. Okay. Coming to the GST adjustments, as I said earlier in the previous slides, that if any adjustments pertaining to the 22-23 reported in the subsequent year, that is 23-24 up to the November 30, that you need to report in the table 10 and the table 11. So whatever the tax you have paid in the 3B till March 2023, that turnover you need to report it in the table 4. That's the taxable turnover. And whatever the turnover on which you have discharged liability through DRC 03, that also will form part of the table 4. That 70-20 example as said by the Venu sir, the same thing here also. And the tax paid in 3B till October 2023, that is up to the November 30, that you need to report in table 10 and table 11. You see what is the table 10, what is the table 11. In case of upward, incremental liability, that we need to report it in the table 10, whereas the vice versa in the table 11. Let's take an example. If any debit note pertaining to the supply into 23-24, that we need to report it in the table 10. Yes. If the similarly, if I issue any credit note pertaining to 22-23, that credit note I accounted in the books before 31st March 2023, but in the returns I have shown that credit note in the 3B, let's say in the month of the April or May. So that I need to report it on the table 10, table 11. So in a nutshell, I can say that table 10 is the incremental liability, table 11 is a decreasing my liability. So the net total turnover, taxable turnover is table 4 plus 10 minus 11 is my taxable GST turnover for 22-23. So it also includes the whatever the turnover on which I have discharged liability through DRC 03 also. Coming to the
1 second, Jagdish.
Yes.
So just to tell the value that needs to be reported here for everyone's understanding. DRC 03, the taxes that you are paying should be paid or reported using the value table. Okay. Where? 1 second, Jagdish. Yeah, so the value of DRC 03 should be reported in table 4. Jagdish, 1 moment. So, if you look at this slide now, the total taxes that you have to pay, let's say 100 rupees, of which 80 you have paid using GSTR 3B of last year, goes to table 4. Let's say 15 you have paid using GSTR 3B of this year, the 15 goes to table 10. The missed out liability, which is 5 rupees you are paying using DRC 03, goes to table 4. So it's also equally important arriving the liability and looking at where such liability to be reported is also important, right? The additional liability now that is paid is not there in your R1. The auto-populated information will not capture it. So you got to true up, make the gross up value and report that additional turnover and the liability that you are paying through DRC 03 in table 4. Like knowing which value where to be reported is also very important. So table 4 is basis the 3B liability of the previous financial year, DRC 03 which you are paying now. Table 10 is the taxes that you have missed out in the last year, but you have already paid through 3B in the current year. Please note, there would be an interest liability if there is any value that is going to DRC 03 and the table 4 and also in table 10, which means you're paying the taxes at a different point in time. You got to compute and pay the interest accordingly. This is something one has to remember carefully. Please continue.
So now we'll see the reconciliation of books turnover. You have the GST and turnover that you have bifurcated between taxable and exempted, and the turnover which have paid in the liability which have discharged in the subsequent year, that we need to report in the table 10. And in the similar way, if any reduction in the liability, that I need to disclose in the table 11. That is 4 plus 10 minus 11 is my taxable turnover. That's the same as the previous slide. Coming to the exempted supplies, in the table 5, let's say I have reported 100 rupees as my exempted turnover. That is bank interest. I have reported 100 in my March 3B. But whereas on accrual basis in the financials, I have accounted income from interest as in 120 rupees. So here I now need to adjust that in the subsequent year, the entire 120 rupees, I put it in the table 5, not like the taxable supplies. Exempt supply, you can consider actual amount as per books, irrespective of whatever you reported in the GST 103B, because there is no tax implication as like in the table 4 that the taxable supplies. The table, therefore, the table 10 and table 11 is not applicable for exempt supply. You put the actual turnover. Let's say, yeah. Sir, do you want to add anything here, sir?
Nothing.
Yes.
The only thing people have to keep in mind, table 10 cannot have exempted turnover. Table 10 cannot have RCM liability. If you have
Yes.
missed out any RCM liability of the previous year and it is paid in the current year, we have instructions which has been issued where they said it's okay, do not report it in GST. And the only thing which moves to the next year is the reverse charge liability of the previous year paid during the year and availed during the year will go to the reporting of R9. So in 24-25, in 23-24 GST R9, if you have paid the 3 in the 3B, it will be reported in the next year 3B. This is the only working you should be carrying it in the records of the line so that you can explain to the officers. But this is something you need to know which value goes where.
Yeah. Now coming to the errors beyond September 22, 23. Now, even after the November 30, if we have filed any additional liability payable or ITC is required to be paid because of short payment of taxes or excess ITC claimed or ineligible ITC you have identified after November 30, then that additional liability you discharge through DRC 03, not through, not adjust through, don't adjust through GST 3B. And please note that you pay the DRC 03 through cash, not by not utilizing the ITC, because you cannot avail the future ITC to pay out the past liabilities. Okay, unless you can pay the DRC 03 using ITC, provided you are maintaining the ITC balance in the ECL more than the liability what you are supposed to pay through DRC 03 now. Let's take an example. You are paying DRC 03 using ITC balance of 100 rupees. 100 is the liability. I am utilizing the ITC. So unless you are having 100 rupees from the date of payable, let's say I required to pay that liability in the month of the Jan 2022, and now in the month of December I am discharging that 100 rupees. So unless I have an 100 rupees from the month of Jan 2022 to December 2023 to December 2023, I cannot use the ITC to pay off my DRC 03. So it is advisable to pay only it in cash.
So just to sum up, the only place where you can pay the DRC 03 ITC is the value of the credit that is available on the day when the liability exists, and that value of the credit is continuing till date. From that day to till date, there is no drop in the credit, then you can only use credit. Otherwise, DRC 03 has to be paid only through cash. This is something one has to remember very much.
Yes, past liabilities cannot be set off with the future credit. Okay. Coming to the spillover effects, how to report the spillover effects. So this is one example. As per GST 3B, my turnover is 1,03,000. Whereas in the previous year, that is in the 21-22, I have reported in the table 10 of GST 9 as 5,000 in the table 10, that, and then the table 11 the 2,000. That is current year turnover reported in subsequent year. So the net turnover I reported in my 3B is 1,03,000 minus 2 plus 3. Net turnover discharged through 3B is 1 lakh only. Okay. So each column is of each case. We'll see all the cases. Okay. So coming to the first case, my actual output liability as per my books of accounts is 1 lakh. And through 3B also I have discharged 1 lakh only pertaining to the 22-23. And my GST payable is 1 lakh. This will flow from my table 4. And the actual paid is 1 lakh 3,000. Out of this 1 lakh 3,000, I have paid the liability pertaining to the 21-22. So that I have to provide it in the reconciliation for internal reconciliation. So here you can see a reconciliation of table 9, payable versus paid. Total payable will be 1 lakh and actual paid is 1 lakh 3,000. In 1 lakh 3,000, last year 3,000 is there. That is 5 minus 2,000. So it is matching. 1 lakh is equal to 1 lakh. So it's a cakewalk, this issue. Coming to the next one, the 22-23, I have short shown in 3B, but I corrected it in the next year. Okay. So we'll see this case. Actual liability as per my audited financials is 1 lakh, but I have discharged liability only on 1 lakh. So the difference 8,000 I corrected in the next year. That is I have reported in the GST 3B up to the October, somewhere in the return from April to the October month returns. So that 8,000 I need to report it in the table 10. Okay. So the reconciliation paid versus payable will be matched. And now coming to the next. Short shown in 3B. I have not underreported in the 3B of 22-23, but not even then also I have not corrected it. How I have to show this? We'll see. The turnover as per my books is 1 lakh 8,000, and in the table 4, what are the taxes I have paid through DRC? GST 3B and DRC 03. I need to report it in the table 4. I have not corrected it. Okay. So that is why I'm adding 8,000 to the table 4, 1 lakh plus 8,000. So if you see through DRC 03, I am paying liability of 8,000. That is why I'm adding 8,000 to the table 4, 1 lakh 8,000. So the turnover as per my books and the GST now is matching. Whereas in the previous case, I have adjusted 8,000 in the subsequent year. That is why I have reported it in the table 10. And whereas in this case, I have not corrected, I have not up to November 30 returns. That is why I'm discharging liability through DRC 03 and adding it to table 4. Now the both the turnover as per my books and the GST turnover is matching. Now coming to the next case, in the 22-23, I have shown the excess in 3B, but corrected it in the subsequent periods. That is from April to October month returns. Actual my book turnover is 92,000, and in the table 4, I have discharged 1 lakh liability. Okay, for the 22-23, but I am required to discharge liability of only on the 92,000, right? But this one I have corrected it. I have reduced this liability in the subsequent year in this 3Bs. So that is why. So I need to report this 8,000 in the table 11. That is the reduction of liability. Okay. Whereas in the previous case, yeah, okay. Sorry. So there is a reduction of liability in the subsequent year. That is why I'm reporting it in the table 11. Okay. Now coming to the next one. In the 22-23, excess shown not corrected. Okay. My actual output tax liability is 92,000. Okay. Excess shown not corrected. And my table 4 is 92,000. But I have excess reported that I have paid the tax on 1 lakh, right? But as per my book turnover is 92,000, that I have paid excess of 8,000, which is not corrected, right? So in the table 9, you will get a difference paid versus payable of 8,000. So this 8,000 you can claim the refund by showing the GST 9 as an evidence that I have paid the excess tax of rupees 8,000. So you can claim that as a refund, or you can adjust it in the future returns. And a combination of all. My book turnover is 1,10,000. Okay. And whereas my GST turnover is 1 lakh after adjustments of the previous year turnover. Whereas the current year I have adjusted in the subsequent year of 7,000 as an incremental liability and 3,000 in the table 11. I have reported the two figures in the subsequent period, 7 plus 3. The 4,000 is in 4,000 I have reported in the subsequent year. Therefore, 1 lakh plus 4,000 is my GST turnover. Okay, but my actual book turnover is 1 lakh 10,000. There is a short of 6,000. Still, I need to pay the tax on 6,000, right? So that 6,000 I will pay now through DRC 03. That is why I am adding that 6,000 to my to the table 4. So in that table 4, I am reporting the 1 lakh 6,000 and the whatever the turnover I have reported in the subsequent year, that is subsequent year, that I will report it in the table 10 and table 11. So is there any doubts in this table? Okay. We'll take up some questions. Any excess paid in monthly 3B can be claimed as refund. Yes, sir, definitely you can claim that as a refund. And further, GSTR 9 is the evidence. In the table 9, you will get that excess payment figure by showing that to the departmental officer. You can claim that as a refund, or you can adjust it in the future returns also. And also advance received for goods wrongly reported in the GSTR 1, but liability was not discharged in 3B. How to report? For the goods, there is no requirement to pay the tax. Advance received for the good, there is no liability to pay tax on advance received. Only for the services, there is an liability. How to report?
You don't need to report because there is no liability to pay.
No
that
liability
tax.
at all. That,
Hence, you wouldn't be reporting it.
yes.
Okay. This slide, whatever Jagdish explained, I'm sure for many it would have been confusing because too much of numbers and our human brain cannot comprehend more than 3-4 numbers. Of course, this slide will be given you for your reference. I want you to go through each of the every scenario on pen and paper so that you understand, because everyone will fit into one or the other scenarios. But the thumb rule in understanding whole of this is, if I have to again recap at the cost of repetition, see the taxes paid in 3B not necessarily is the taxes for this year, right? Last year tax could have been paid in 3B of this year also. So that means what is the tax that I have paid for this year is if there is any value in table 10 of the last year, I have to reduce it from this year 3B. So that gives the taxes that I've paid in this year. And I might have paid the taxes of the current year and next year 3B, which I will be reporting in the table 10 of current year. So the previous year table 10 will be a reduction in item. Okay. The tax paid and payable details is there in table 9, which is again the statement of fact. The sum total of 3B would be coming as 9 paid. The 9 payable will be derived from whatever is in the table 4 payable you are showing, it will be in table 9 payable. And pardon me repeating on these table numbers because those who are handling annual returns, you should be knowing it. If I'm paying something through DRC 03, my taxes paid will be lower because it's not there in 3B. My payable will be higher. So payable minus paid, you should have a DRC 03. Assuming current year there is no spillover effect. Previous year, I have short paid the taxes which I have paid in the current year. What will happen is current year, my payable value will be lower and paid value will be higher. Because the paid of the current year pertains to the current year and something of the previous year. So you also need to have as a reconciliation the gap between payable and paid. If at all there is a gap, why there is a gap? Forget for a moment to so many numbers which are there on the screen. Eventually, when you start putting, you will also get this number. You should appreciate there would be a difference. What is that more important is that difference explainable? Can I reconcile and say, hey, look, this number is differing because of reason 1, reason 2, reason 3. That is more important, which you should be able to give it to a proper officer or the and whomsoever coming for endorsement or inspection, anyone. So you should be having that working, that is important. Any excess paid in monthly 3B can be claimed as a refund? Yes. It could also be a situation where this year we've been talking about that you have paid short, but you could have paid extra. Like we have circular 26/26, which said if you have paid extra, in the next month you can adjust. Like March month I paid extra, April I can reduce it. So my liability is 100, but in 3B I have paid 110. What will I do? In my table 4, I will be showing as 110. And since I have adjusted 10 rupees next year, I will be showing 11 in table 11 as 10 rupees. So 4 plus 10 minus 11. So 110 minus 10, 100. It got set. Contrarily, you have applied for a refund. You can also apply for a refund. Generally, these refunds are not sanctioned. Everyone, they sit on their own egos. That's a different story. But for some reason, you have got the refund, then they are also convinced that yeah, you erroneously you paid extra taxes. What will then happen? There will not be any value in table 11 because you are taking a refund as if the value of the 3B itself is lower. So your table 4 will be equivalent to the total taxes paid minus the refund that you have claimed. So these things that you need to be very mindful when you're taking the values to these different parts of GSTR. Please go ahead.
So by this time, hope all you have got grip on turnover tables. Table 4, table 5 plus 10 minus 11 is my turnover as per GST. So now we'll see the issues on the turnover part. Whereas the correct type of tax I could charge is CGST and LCST, and the same I mentioned on my invoice and the disclosed in the return as IGST. So instead of CGST and LCST, I declared in my GST1 as my IGST, and this is the same. So I have rectified in the same financial year. How to report it in the GST? Because I have rectified in the same financial year, the correct information has to be disclosed in the table 4 because error is rectified in the same financial year. Whereas coming to the second case, the correct type of tax I have to charge is CGST and SCST. But whereas in the returns, I have disclosed as an IGST. But whereas rectification, I have done, but in the subsequent year of GST 3. Here you are having two options. Option 1, you can report CGST and SGST in the table 4, and the tax adjustments can has to be made in table 10, 11, 10 and 11, or else keep the reconciliations open and provide the reasons for the difference you will get in the get it in the GST 9C. Okay, and coming to the third case, you are supposed to charge CGST and SCST, whereas in the return you reported it as an IGST, but you have not made any correction. Okay, so in the table 9, you will get the difference of CGST and SCST, whereas IGST also you will get the difference. So you can correct the tax in the table 4 and additional tax and pay the additional taxes. Whatever the you will get the difference of GST, CGST and SCST as payable. Pay that the CGST and SCST through DRC 03 and claim this IGST as a refund, or you adjust this IGST in the subsequent returns. Coming to the next, correct type of tax is CGST and SCST, and disclosed in GST return also CGST and SCST. Whether rectification is whether rectification done in GST returns, not applicable, because only in the invoice you have mentioned as an IGST, but whereas you have correctly disclosed in GST return as an CGST and SCST. Coming to the next issue, CGST correct type of tax is CGST and SCST, and you mentioned on invoice as IGST, and also you declared in the GST return as IGST, and that discharge liability is also IGST. So in this case, here also you are having two options. Correct taxes are CGST and SCST, right? That should be disclosed in the table 4 of GST 9. And you will get the difference in the table 9 that you paid CGST and SCST through DRC 03 and wrongly paid GST. Either you adjust that wrong paid IGST in the subsequent returns or claim refund, as like in the previous slide case only. So, and then the option 2, disclose IGST as per the returns in the table 4 itself. If department asks, then you can answer them. For this, there will be no interest. If the department identifies it later, you see for CGST and SGST, you have paid IGST. After 2 years, he may ask us. At that time, you pay the CGST and SGST. You claim it as for that you no need to pay the interest as per the section 77. So, any doubts on these issues? Let's see the questions. Any
There
excess
are no
paid in month?
questions. Are there a question? Yeah, okay, there's one instance claim, yeah.
Yes. Any excess paid monthly 3B can be claimed as refund? Yes.
We have discussed that.
Okay. Now coming to the ITC part.
Yeah, so before we move on to ITC part, I want to sum up on the liability. GSTR 9 is a statement of fact. You will not report any value if you do not pay the taxes. And again, parallelly, I'm saying it's a last opportunity to correct. Correct meaning if some liability is not paid, then you can pay it through DRC 03 and report it. Okay. And if you have some turnover on which the taxes are not paid or not payable, and you think them as exempt supply, you will be reporting it in 5D, 5E, 5F of GSTR 9. For which you look at other income. In fact, in the chat, there was a question people were asking about insurance. Like I received insurance reimbursement. Say, let's say my machinery got damaged, so I have to incur heavy repairs. So to augment that, I made a claim of the insurance. Insurance company has paid me. I lost something, and insurance company has paid me. So the payment received from insurance company is not a supply at all. The payment that I have received from insurance company is not a supply at all. On the contrary, it's a different story. If there are some goods lost which I have to reverse the ITC, that's a different story. But from the liability side, it is not a supply. So it's a no supply, and you will not be paying any GST on it. Yes, guys, Jagdish, please go ahead.
Yes. Yeah. Now coming to the ITC part. So in the GSTR 9 and 9C, the part 3 of the 9C consists of 3 tables, table 6, table 7, and table 8. In all the 3 tables, we need to report the ITC. We'll see what and where to what type of transaction I need to report on all the 3 tables. Table 6 is about the ITC avail. Purposefully, I have striked out as per 3B because as I said earlier, this is the last option to correct if there are any mistakes. So let's take an example. As I already said the same thing. If ITC on imports availed on all other ITC, now I can correct it by reporting it in the imports and reducing it from the all other ITC. That is why I have struck it for as per 3B. Coming to the table 7, table 6 is all about the gross ITC. I have to report it here, availed as per the 3B. And coming to the table 7, whatever the ITC I have reversed in the 3B, that I need to report it in the table 7. Coming to the table 8 is the reconciliation of ITC availed in 3B with the GST 2A. We'll see the significance of the table 8 in the later slide, because now we are availing the ITC in 3B based on 2B, not with 2A. But here in the GSTR 9, it is comparing the ITC with 2A. So that we'll discuss in the later slide. First, we'll see the table 6, table 7. And whereas in the GSTR 9C, we need to report the ITC part in the table 12 and the table 14. In the table 12, expects the reconciliation as per the books versus the ITC as per the 3B. Whereas in the table 14, we need to report the expense-wise bifurcation of ITC. So that is all about the ITC. We'll see about the each table in detail in the later slides. Now we'll see to match with the ECL. This we'll discuss it later. Table 7J. So this will also, yeah. Now we'll see how to report the ITC, the GSTR 9. So the ITC pertaining to 22-23, I have availed it in the same year, that is in the 22-23 itself. Then I need to report it in the table 6. Whereas the ITC I have availed in the subsequent year, that is up to the November 30. Then I need to report it in the table 13. In the similar way, I have reversed the ITs of 22-23 in the same year. Then I need to report it in the table 7. Whereas I have reversed it in the subsequent year, that is in 23-24, that I need to report in the table 12. So my net ITC will be table 6 minus 7 plus 13 minus 12. Okay, that is my net ITC as per GST for the year 22-23. So this is the 7J. 7J is my net ITC. That is gross ITC I need to report in the table 6 and the reversals in the table 7. And the table 6 minus 7 is my 7J that will flow into my table 12 of GSTR 9C. We'll see the reconciliation of GSTR 9 ITC. So whatever the ITC utilized during the year, it should match with the table 9, the ITC which is the liability which have paid using my ITC, that it will match with my GSTR 9 and unutilized ITC, the ECL balance for March 2023. So on sum of both these things, it will match with my 7J. Coming to the table 6, we'll see what are all I need to report in the table 6. That is the gross ITC. Okay, so table 6A flow to the GSTR 9 from my 4A of GSTR 3B. That is 4A means it includes ISD credit, import of service, import of goods, reversals, forward charge credit. All that sum up will be auto-populated as in my GSTR 9 in the table 6A. Table 6A is my auto-populated figure. To that auto-populated figure, I need to provide the breakup from 6B to 6G. So what are so how to provide the breakup? We'll see. If you see here, these are all the reference table from where I can use to fill up the table 6B to 6G. Now, first we'll see the all other ITC. The reference table in GST 3B 4A5, we know all that. But from August 2022, the reporting requirement in GST 3B is changed, right? There is a concept of temporary reversal and permanent reversal. If the temporary reversal credit, if I have reaval, I need to add it to the 4A5 and disclose it in the 41, right? So in the table 4A5 itself, the temporary reversal credit, I'm availing it twice. The first time, the auto population, and the second time, I'm re-availing. So in the 4A5, the temporary credit is, I'm reporting it on that twice, right? So the actual credit, what I'm availing in the same period, that I need to report it in the table 6B, whereas reaval credit, what I'm adding it to 4F and reporting in the 41, that I need to report it in the 6H. Okay. And the reverse charge credit from in case of reverse charge credit from unregistered dealers, I need to report in the 6C, and from registered parties, I need to report it in the 60. Whereas from import of goods 6E, import of services 6F, and ISD credit in the 6C. These are all the reference tables. So if you have by mistake, you have reported import of services in the all other ITC. Instead of 4A2, we have reported in the 4A5. Now you can correct it. Report correctly in reduce from 4A5 and report it in the 4A2. Further, in the 6B, you need to bifurcate the input between capital goods, inputs, and input services. Bifurcation of capital goods is mandatory. If you cannot bifurcate input and input services, you can put all that figure in the input itself. Okay. So this is how we need to report the gross ITC available in the 3B in the GSTR 9. So table 6 is all about the reporting of the gross ITC availed in the GST 3B.
Okay, I want to add a couple of points here. Firstly, the definition of input tax credit. 2 subsection 63 talks about input tax credit means credit of input tax. The fundamental question one needs to understand, what is input tax credit? Whether I made a purchase, will it be an input tax credit? Answer is no. I received goods input tax credit? No. I have the bill, is it an input tax credit? No. Unless otherwise you don't fulfill the last condition of 16 subsection 2 while reporting it into your electronic credit ledger, that till then it is not an input tax credit. To put it in a simple plain language, input tax credit means the value that is reflecting in your GSTR 3B and electronic credit register. Only that value which is reflecting there is your GSTR input tax credit. Till that point, it is not an input tax credit. Why am I saying it? I have made purchases in the last year, reported in the current year. It's an input tax credit of the current year. It might be there in your 2A, 2B of the last year, books of accounts last year. Whenever you are taking, it is an input tax credit at that point in time. So that is why where Jagdish was showing you a comparison, on the right side, you are seeing the different tables of GSTR 3B is going to GSTR 9. It has no bifurcation saying that it is of current year or previous year. It could be of 2A of current year or 2B of current year. All right. So, in fact, someone was asking last year ITC availed in this year. Will I show here? Answer is yes. This is the table 6 and 7. That is the table. Just this previous slide ones. Like if you notice the tables that you will, just this previous slide. I think we had that slide. Yeah. The table 12, 13. So if you notice, if you have a credit that is availed in 22-23, it goes to table 6. If you have availed it in 23-24, it is going to table 13. It is only a reporting. Table 13 and 12 and 13 is mere reporting. So current year table 6 will also include previous year ITC 21-22 availed in 22-23. Anything availed in 22-23 will be reported here. Please note, anything pertaining to 22-23 availment will come to table 6. It doesn't matter. It is of 22-23 or the subsequent period. This is something that you need to be mindful of. You can proceed.
Okay. So master net credit availed through 3B. Table 4C of GST 3B. So what is the table 4C? 4A minus reversal 4B even net ITC in the 3B. So that is nothing but my table 6A of GST 9 and 7A of GST 9. That is table 6 minus 7 is nothing but my net ITC of GST 3B. Different between these two, that is table 7A and 4C of table 4C of GST 3B. Only when you have reported wrongly in the table 6 or table 6, or you have made additional reversal now. Okay, let's say you under rule 42 have reversed 1 lakh credit, but now you have recomputed on the whole year turnover basis. That for the whole year we have recomputed the rule 42. Now you got the reversal of 1,20,000. But whereas in the 3B you have reversed only 1 lakh for the entire 22-23. So now you have reported 1,20,000 in the table 7. So now you got the additional reversal of 20,000. That is why there may be a chance of difference between the 4C of GST 3B and your table 7J of GSTR 9. Otherwise, both will match. So coming to the expense part, freezing of ITC. Do the expense wise analysis. Bifurcate the expense into 2 parts, with GST and without GST. and with GST, and further bifurcate the eligible and ineligible ITC, and without GST, identify for RCM. If any RCM are there, I need to pay under RCM or any, and also classify it as exempt and non-GST. This bifurcation, this expense analysis can be used to fill up the table 14 of the GST 9C. There we need to provide the expense-wise ITC details, the table 14 of the 9C. I will show that in the later slides.
Yeah, one moment, go back, sorry. So now Jagdish will be handling ITC eligible, ineligible, RCM, all that. Like how you have done a multifold reconciliation for output. When it comes to the ITC, all that you have to do is take the trial balance, all the transactions, segregate into first two categories. Category one, there are expenditure with GST or capital revenue, whatever there is something with GST. Category two, there is no GST. For the category one, when there is a GST, is that eligible or not? Segregate into eligible and ineligible. Because you have to do 990. If something is ineligible discovered now, at least you can pay through DRC03, right? Just because you discovered something is ineligible, not reporting in table 6 doesn't mean that you have made good, right? So segregate that categorization, and wherever the ITC is not there, though it is very shortly as written exempt non-GST, you figure out, did I purchase from a registered dealer, but it is an exempted goods? Did I purchase from a composition dealer? Did I purchase for a small dealer who is not liable to be registered? Or it could be a situation where I have to pay under reverse charge. Most of the time I have noticed import of services not accounted or accounted, payment to be payable to the foreign company basis the year-end turnover, or some entries that are coming under reverse charge, all that would be getting discovered, right? We will deal with the RCM later, but doing this reconciliation when it comes to ITC is very important. Like how you have a base sheet for the turnover, there should be an ITC working base sheet. This is the total expenditure and how much is ITC, no ITC, right? Please continue.
Okay. Also, do the rule 42 and rule 43 computation for the whole year. You this I will discuss it later. So ITC reconciliation with the books. So as I said earlier, table 7J is my net ITC. That is gross ITC minus reversal. Table 6 minus 7. Table, nothing but that table 7J of GSTR 9. And add ITC level for the previous financial year. That is table, this I need to report it in the table 13 of the GSTR 9, right? And any reversal of our ITC pertaining to the 22-23, I made it in the 23-24. That I need to report it in the table 12. So this on summation, this net ITC for the current year and current year ITC available in subsequent year, and the current year ITC reversed in subsequent year is nothing but my ITC as per the books. This is the same I need to report in the table 12. There, the table 12 expects the reconciliation between the books and my GST ITC as per my GST records. Now we'll see the spillover effects of the input tax credit. So as per 3B, I have discharge liability of 1,02,000, and in this 1,02,000, previous year transactions are also there. In the 21-22 of table 13, I reported 6,000. That is current year ITC I have availed in subsequent year. That is 21-22 ITC I have availed in 22-23 of 6,000. And similar way, I have reversed 21-22 credit in 22-23 of 4,000. Therefore, the net ITC I have availed for 22-23 is 1 lakh, because 1,02,000 minus 6,000 plus 4,000 is nothing but 1 lakh. Therefore, the ITC what I have availed for 22-23 is only the 1 lakh. Okay. Now we'll see the each case. Each column is of the each case similar to the turnover. So as per my books of accounts, as per my audited financials, my actual ITC, eligible ITC is 1 lakh. So in the table 6, 1,02,000 is my actual paid, whereas in the table 6B, I have to provide the breakup of breakup for 1 lakh, what of the ITC I have availed for 22, 23. So here in the table 60, it will always get the difference in all the cases, because uh, in that table 6B, I have to provide the bifurcation only for the ITC, what I have availed for 22, 23. For 22, 23, I have availed only 1 lakh. So there is no spillover effect in this, because current year ITC have not adjusted in the subsequent year. Therefore, entire ITC I will report it in the table 6. So there is no requirement to fill table 12, 13. Now coming to the next case, I have reported short, but I have availed that credit in the subsequent year. In the for the financial 22-23, I have short, and remaining credit I have availed in the subsequent year. We'll see how to report this. So actual ITC as per books of accounts is 1,08,000, but in the 3B I have availed only 1 lakh, and remaining 8,000 I have availed in the subsequent period. So I need to report that 8,000 in the table 13. Okay. So coming to the next case, the 22-23, I have reported, I have availed short ITC, but I have not claimed in the subsequent year. Okay. In that case, within the time limit as provided in the section, for that I can avail the ITC only up to the October month returns, if that also filed before on or before November 30, right? So even that period also, up to November 30 also, I have not claimed that short ITC. Therefore, anyway, I am losing that ITC will get lapsed. I cannot avail ITC beyond November 30, right? So in this case, how to report this? Now, ITC as per books, it will be the 1,08,000, and my ITC for 22-23, I have availed a written GST 3B is 1 lakh. So difference between these two, 1,08,000 and 1 lakh. In the table 12, you will get a difference of 8,000. So that you provide the reason in that table 13 that this ITC has not availed and lapsed. In that table 8 also, you will get the difference of 8,000. You report it in the table 8 that ITC is available but lapsed. So this entire ITC will get lapsed. And coming to the next case, in the 22-23, you have availed excess ITC, but that excess ITC you have reversed in the subsequent year. Okay. Now we'll see how to report in this case. The actual ITC as per my books of accounts is 92,000, and as per 3B, I have claimed the ITC of 1 lakh. I have claimed of 8,000 excess. Okay, but that 8,000 I have reversed in the subsequent year, right? So that I need to report in the table 12, because I have adjusted that. I have reversed that ITC in the subsequent year. Okay, in the 23-24, up to the November 30, I have reversed the credit. That is why I am reporting it in the table 12. Okay, now coming to the next case, I have claimed the excess ITC, but not corrected, not adjusted in the subsequent, even after the subsequent, up to the November 30. So now we'll see how to adjust this. Actual ITC as per books of accounts is 92,000, and my ITC available as per 3B is 1 lakh, right? So I have claimed the excess ITC of 8,000. Now I need to reverse that liability through DRC 03. 8,000 is payable, and even in the table 12 of GST 9C, you will get the difference of 8,000. You provide the reason that this excess liability has discharged through DRC 03, why the so and so date. They put that comment in the 9C table 13. And combination of all these cases. As per books, my ITC is 1,10,000, and my ITC as per GST 3B is 1 lakh. Okay. In the subsequent year, the current year net ITC I have availed in the subsequent year is 7 minus 3, 4,000 I have availed in the subsequent year. Net ITC I have availed in the subsequent year. Okay. So total ITC how much I have availed? 1 lakh plus 4,000. 1 lakh 4,000. Out of 1,10,000 eligible ITC as per my books, I have availed only 1,04,000 in the GST returns, current year plus subsequent year adjustment. So that 6,000 will get lapsed. Okay. So provide the reason that 6,000 is lapsed ITC. So is there any doubts on this, any cases? We'll take up some questions.
Yeah, so just before questions, I want to again reiterate. See, table 8, ideally, I wish the government jumps from the GST R9. It had a value in the initial days when the ITC was taken by 2A by, but now we are taking it by 2B. But nevertheless, just conceptually understanding the table 8, it's a reconciliation between 2A versus 2B. A reconciliation between 2A versus 2B. 2A is a accrual basis accounting. 2B is a receipt basis accounting. This is again a thumb rule difference. 2B, which is a static report. So returns filed by R1 by 11th is coming in 2B. If it is filed later, it will be coming in 2A, but it will not be coming in 2B. It will come in the next month 2B. So generally 2A will be in a larger bloated figure, 2B will be a lower figure. But next period, 2A will be a lower figure, 2B will be a higher figure. So the government wants to know all the items that are there in 2A, have it been accounted for or not. 2A, you can say as purchases for the financial year 22-23. 2B is the credits eligible for the financial year 22-23. So there could be a situation out of all the line items of 2A, you would have availed some, right? That goes to your 8B. Your 8A is a 2A. Those that you have not availed, which means you could have availed next period, that goes to 8C. Something you have not availed goes to 8D. Now, this is a happy path, but there would be a lot of other things. The last year data which is coming now, you have to take 8C as negative. I have erroneously availed some credit, reversed subsequently. So my 6 is higher and 7 is higher. So your 8D would be negative. So a negative 8D indicates that you have availed more credit. You got to substantiate it by showing value being there in table 7, or there is a DRC03, or it is genuinely some mistake. If there is an 8D which is positive number, that's what you have, the Jagdish has shown on the last two columns, 8,000 and 6,000. That means some credit you have not availed, which is, you can call it as a lapse credit. So which goes to your 8E and 8F. Like for some reason you did not take those credits, right? Table 8 is not an easy thing. If you find that there are more reconciliation items you want to explain and the 8 is not properly drafted table, no worries. Government said, prepare your reconciliation, upload it by way of an additional annexure in your 9C. 9C has 4 attachments that you can do: P&L account, balance sheet, 2 attachments, other 2, your additional workings that you are there, you can put it and you can upload that. That is something you can consider. But in a higher level, to understand 8A, 8 is 2A versus 2B reconciliation. Please proceed, Jagdish.
Yeah, now coming to the RCM.
1 second, Santosh is saying, maybe we can unmute. Santosh, can you unmute yourself and ask the question? You said should be reported in 6B, but the slide is different. Maybe I didn't get your question, Santosh.
So, yes, sir. In the slide which has been shown as a spillover effect, okay,
Yeah.
if that slide is put here, I can.
Yeah, Santosh, Jagdish, can you just put up that slide? Maybe we'll be happy to correct ourselves.
This one.
Yeah.
So, as you mentioned that in table 6B, we have to take even the 21-22 credits which we have already taken in 22-23, right?
Okay, I'll put it this way. Table 6 will be credits availed in 3B of this year. It could be of 21-22 or 22-23.
Correct.
In
So,
the current example, if you see, there is a plus 6,000. That is what you are talking about?
no, you are saying that in 3B it is 1,02,000.
No, in 3B is 1 lakh. Okay, the first one you are talking about. Yeah, 1,02,000.
1,02,000. But in the when we come down in table 6B, in the first scenario, you are saying it is 1 lakh has been taken there.
Okay, Jagdish,
Sir,
yeah.
And difference, there should not be difference if it, as you said, if we are taking as per the 3B, then there should not be any difference.
There shouldn't be any difference. Maybe like this slide is little congested. What I'll do is, Santosh, what you said is right. I will break this into multiple scenarios and I'll send it.
Okay. Yeah.
yes,
So
in the table
basically,
6B,
your 6B is 3B.
Okay, got it.
The only situation where your 6As and 6Bs and others will not match is erroneously you have reported a value higher in 3B,
Okay.
which you have reversed subsequently. Instead of showing it under 7, you want to net it off in 6 itself. Is the only reason. Otherwise, 3B and your table 6 should match. You
Okay.
cannot have a reason. Basically, if as a control checkpoint, 7J and 6J is a checkpoint.
Okay. Yeah.
Yeah.
And actually, one more thing, if I can ask it now.
Yes, yes, please, please, please.
Yeah. Because as there is a temporary difference and a permanent, not a difference,
The
temporary.
temporary reversal, which is for B2
So
and permanent
because
reversal
of
for
that,
B1.
because of that, in table 8, there will be a huge difference which we can foresee there, right? Because the table 8A will take only that particular year, credit, whereas in table 8B, it will take a 6B plus 6H.
Correct.
So
Yes.
which will be 4A5 of table form 3B and 4D1 of form 3B.
Correct.
So then if it is a twice which it is taking there.
Correct.
So the difference will be of huge in a table 8.
D.
Yeah.
Your 8D will be negative to that extent.
Exactly.
Right? So for the ease of everyone, let me give you with an example. What Santosh is saying, let's say I have received a credit in my GSTR 2A for 100 rupees, of which 20 rupees I was doubtful. I don't know whether I can take it or not. What I have done is I have reported 4A5 as 100, 20 I parked into my 4B2. Net credit I have availed in 4C is 80. 2 months later, I realized, yes, that belongs to me. I reported it back in my 4A5 and reported it in 4D1 because it's a reclaimed credit. So for the full year, if I do a summation, my 4A5 is showing 120, while my actual 2A or 2B is only 100. How are these values flow into GSTR 9? 6A will be showing 100, 6B is showing 120. This 120, I have to take 20 rupees out from 6B. I have to report it in 6H. 6B plus 6H is what my 4A5. When this value is traveling to my 8, 8A is 100, 8B is 120. Because of that, 8D will show a negative 20, indicating that you have claimed more credit because of the bloated figure. How do you explain the officer that this 20 is not an excess credit? Point number 1. This reversal which you have done in 4B2 the first time should find a place in table 7. Other reversal, because it is not a specific rule reversal, it's the other reversal you will be reporting in the other reversal of table 7. So your minus 20 in 80 is well explained with a reversal which has already happened. Point number 2, any value of 6H will always give you a negative value. It is again an explanation that you can give it to the department. That is why I said table 8 is kind of cumbersome table. If you find it, the value, the table 8 columns are not matching, you can do your own type of reconciliation and upload it again. Hope this clarifies the question, Santosh.
Yes, madam.
Perfect.
Yes, even 2A and 2B will also never match it. So it's better to do the reconciliation with 2B and upload that along with the GSTR 9C.
Yeah, there's a question from Guru. import IGST value got reported in 2B April 23 for bill relating to March 23, which we need to be taken in 22-23. Hence availed through 3B of April 23. How to handle this R9 in the IGST value reporting? Pretty simple, Guru. Since you have availed it in your 23-24, firstly, what gets reported in your 6A is the credit that you have availed in 3B. This credit you have though purchased of the last year, but you have not availed. It is not there in 6A. And you should not report it in table 6E, which is imports. You shouldn't report it because you have not availed it in this year. So last year you will do nothing. You can report for your own control purposes for reconciling with the books. Anyhow, you will do this reconciliation in your table 12 of 9C. You report that value into table 13 of the current year GST 9 for your control purposes. But this value will not appear in 8C. 13 is all the credits that you have carried forwarded. But 8C is only the forward charge credits that you have carried forwarded, only that would be 8C. To that extent, there could be a difference between 8C and 13. Guru, hope this you understood and it's clear.
And one more thing I want to add it here, sir. For imports, there is no requirement to reflect in GST 2B. Only for the invoice, if you see the 16.2, that requirement to get reflect in 2B is only for the invoice and the debit note, not for the imports. Imports, you can take the ITC based upon the bill of entry copy.
Yeah, so for the benefit of again all, what Jagdish is referring to, Rule 36, Sub-Rule 4. Okay, so 16.2, the newly added AB and BA conditions. One of the condition refers to 36 Sub-Rule 4 that it should be visible. Now, that only talks about the outward supplies in the form of GSTR1 or IFF. The import credit is not flowing through GSTR1 reporting. Hence, that condition to ensure the thing is not applicable, right? So the 16, the newly added condition, so 16.2BA, right? So the having it communicated is not applicable. So you could have taken in last year also, that's fine. Having taken this year, this is the approach you should be doing it. Please proceed.
Okay. Now coming to the RCM part. So in the table 4G, inward supplies on which RCM is payable, that I need to report in the table 4G. So in the first slide, I have discussed about this, and the ITC on the RCM from if I procure from the unregistered party, that ITC on RCM ITC that I need to declare it in the table 6C of 9. Whereas from registered dealer, if I procure and pay the liability under RCM, that I need to report it in the 6D. So the liability, I need to report it in the table 4G. Whereas the ITC on RCM, in case of unregistered party, I need to report in the table 6C. In case of in case I cannot bifurcate between unregistered party and registered party, declare all it in the 6D. This is the validations. The table 4G that my liability under RCM, it should be less than or equivalent to table 6C or 6D. That is the credit availment. So always you should be less than or equivalent to my ITC available on RCM. Similar way, table 4G of GST 9 should be less than or equivalent to table 4 of my 2A. That is a supplier report mark their outward supplies as an RCM applicability. Yes. So my liability should be always less than or equivalent to my 2A. And coming to the 6D, this is also table 60 of GST 9. This is with regard to the ITC avail. 6C is unregistered and 6D is registered, but here we have given only 6D. Anyway, that ITC or ITC I have availed should always be less than or equivalent to table 4 of GST 2A. coming to the table, like table 8, we already discussed on this. Always there will be a difference between the 2A and 2B. But here in the GSTR 9, it is comparing with 2A, but we are availing the credit based on the 2B from the August 2022 onwards. So it's better to prepare the reconciliation statement based upon the 2B, not 2A, and upload along with the GSTR 9C toward the future litigations. And this is the summary of what we have discussed till now. In case of the turnover, table 4 plus 10 minus 11 is my GST turnover. Coming to the tax payable, column 2 of the GST, and that is tax payable will flow from my table 4N. And coming to the taxes paid, this is the auto-populated figure in my GST in my table 9 of GSTR 9. It will be auto-populated based on my 3B. Into the table 17, it requires to report HSN outward. So what are all the turnover? I need to include it in the table 17. So table 4, that is outward taxable supplies, and table 5, non-taxable supplies, plus 10 minus 11, that is the adjustments that made in the subsequent year. So what are all the things I can exclude for HSN? The advances, the RCM on inward supplies, and the non-GST. On all this, I now need to report the HSN. For remaining all, I need to report the HSN. And for the reporting changes also, for HSN, the registered person having the turnover more than 5 crore, I need to report mandatorily the 6-digit HSN code for all B2C and B2B. Whereas for the registered persons having the turnover, aggregate turnover less than 5 crore, they need to report HSN of 4-digit only for the B2B. They have given exemption for B2C supplies. Whereas for the persons having turnover more than 5 crore, they need to report both for B2B and B2C 6-digit. Whereas below 5 crore, only for B2B, they need to provide a HSN of 4-digit. Whereas for HSN of inward supply, it is an optional thing. And we'll see what are all the changes for 22-23 and optional tables. Earlier, we can provide all the exempted, related, and non-GST supply. You can put the combined figure in the exempted itself. But now you need to report separately the non-GST supply, whereas you can club exempted supply and nil-rated supply and put it in the exempted itself. And coming to the supplies or tax declare table 10 and table 11 with regard to the turnover, that the adjustment that made in the subsequent year, details of additions or amendments to any supplies already declared in the returns of the previous financial year, but such amendments were furnished in the table 9A, 9B, 9C of GSTR 9 of 23 to October 23 shall be declared here. This is nothing but whatever the amendment that we declared in the table 9A to 9C of GSTR 9 from 23 to October 23 return, only that will form part of the table 10 and table 11. Now coming to the ITC part, table 13, ITC availed for the previous financial year, that is current year ITC availed in the subsequent financial year. So what I need to report it here, details of ITC for goods and services received for the previous financial year, but ITC for the same was availed in the returns for the months of April 23 to October 23 shall be declared here. So if you read this table independently, ITC availed for the previous financial year, you read this table along with the heading part 5. Otherwise, you may feel that ITC availed for the previous year ITC in the current year. Not like that. The vice versa. The current year, whatever the ITC of the current year availed in the subsequent year, that I need to report it in the table 13. So any ITC which was reversed in the 23-24 pertaining to 22-23, but reclaimed in reclaimed in financial year 22-23, the details of such ITC reclaim shall be furnished in the annual return of 23-24. So what it is saying is, any ITC which have reversed in 23-24 and reclaimed in the 23-24, that will be form part of the 23-24 9 GSTR 9. And also similarly, there are a lot of questions with respect to the RCM also, reversal mechanism. I have discharged the liability of 22-23 in the 23-24. Let's say in the December month, I am discharging the RCM liability pertaining to the 22-23. Where I have to report it now? Whether it in the where I have to report it in the GSTR 9 of 22-23? Nowhere, because that will be form part of 23-24 GSTR 9 only. At the time of audit or whatever it may be, when the department asks, you have to explain with your workings that I have discharged liability of current year in the subsequent year and avail the ITC in the same year. Okay. 9C related validations, all this we already discussed. With respect to the tax payable, table 9 plus 10 minus 11. And we'll see the updates. I will quickly run the update, only one update. Recently, the Supreme Court had given the judgment in the case of Suncraft Energy Private Limited. It pronounced that the issue is mismatch of ITC availed in 3B with the 2A. Let us go through the facts that Suncraft Energy Private Limited has availed the ITC, and on some invoices are not reflected in 2A, and department has passed an order to reverse the ITC on the for those invoices on which invoices are not being reflected in GST 2A. So Suncraft has filed a writ and went to the High Court, Kolkata High Court. Honorable Kolkata High Court has said that input tax credit is not coterminous with non-reflection of GST 2A. That means what the Kolkata High Court said is, so primary liability to pay the liability lies with the supplier only, unless the GST authorities prove that they have made an effort to recover the tax from the supplier. They cannot ask the recipient to reverse the credit. Well, let's see the following cases it has mentioned. Only when the department has proved that there is a collusion between the supplier and the purchaser, and the supplier has gone missing, and supplier has closed down its business, and supplier does not have any assets and such other contingencies. Only in these cases, department can go and ask the recipient to reverse the credit. Otherwise, they cannot simply go and ask the recipient to reverse the credit. So definitely, this is a great relief to the honest taxpayers, and this will be a landmark ruling. There are a lot of pending cases at the various levels of authorities, and now from now onwards, the department cannot simply raise the show cause notice to reverse the credit on those invoices which are not reflecting into a. First, they have to make an efforts to recover the tax from the suppliers, and then only they can come to a recipient and demand them to ask them to reverse the credit or pay the liability, whatever the credit not reflecting in 2A. So this is and then the department revenue has went to the Supreme Court, and Supreme Court upholds the judgment of Kolkata High Court. So from now onwards, for 2A versus 3B mismatch, we can use this judgment, provided we have to prove all the conditions are provided in the 16.2. We already satisfied all these conditions. Then only you will get a relief in this case, 2A versus 3B mismatch cases. So
yeah. So also you can, we have our WhatsApp channel. You can scan this to join our WhatsApp GST updates. So every day we post one or the other news around GST so that you are up to date. And if you have any questions, we will take it up. We can, so 5 o'clock we have to move to the tech session. There's one question. So in fact, Arvindan has actually directly posted, instead of reporting the previous year credit in 6B, can we report it under 6M? Answer is yes. This will reduce the complication of table 8. The answer is yes, but there is no clear guidance given by the law, and not necessary that the credit per se, the input tax credit, is it becomes a credit only when you take in GST or 3B. So that being the thing, we can take it anywhere. Then there's one more query. Suppose we have reversed financial year 22-23 in 23-24. Can we net this reversal in table 8C? The answer is again, I wouldn't say that you will have to take it in 8C. You will be reporting this in table 12. See, any negative 8D, you should have an explanation. You can always say, hey, look, I have reversed next year. It's already there in table 12. Okay. Then Padmanabhan question, what about ITC reversal as per rule 42, 43 for exempt supplies, which we have not discussed? Yes, Padmanabhan, this is a common thing one has to actually, if you find any exempt in your table 5, you have some common credit reversal. Only 2 points I wish to tell here. The common credit reversal formula is simple. Exempted turnover divided by total turnover multiplied by your common credit. What is that? Two things you should remember. Remember point number 1, when you talk about exempted turnover, you cannot include interest income in it because everyone has interest income should not be included in it. Point number 2, when you talk about common credit, it should be exclusive to, or it should not be exclusive to taxable. So this supplies is applicable to all. Could be accounting charges, audit fees, security charges. So something where you cannot specifically identify. Generally, people make a mistake is total input tax credit is multiplied. That's what department also do. That are the two things, Mr. Padmanabhan, you should be remembering. Then there's one direct question. Rashmi Rao is asking, HSN auto-populated option is not there. Any suggestion for accumulation of the same mentioned in 3B? Madam, 3B definitely do not have HSN-wise reporting. You can collate all the GSTR1 table 12s and take that value. If you are using any software, third-party softwares, it will assist you in collating this data. Manjunath is asking, send the information. Yes, you will be getting the information over email. Rajini madam is asking 6B, while we are taking inputs, we need to deduct credit notes. Again, this is one confusion department had created. In December 22, exactly 1 year back, they have changed the methodology of credit note accounting. Till that point, they were suggesting that the 6B, forget 6B, the 4A5 should be gross value, credit note should be reported in 4B. But they have changed this methodology from January, saying that the 4A5 itself should be net of credit notes. However you are doing, it is absolutely no issue. You can show the gross value in 6B and the credit note reversals in 7. Or net of credit notes also you can show in 6. How you have done in 3B, accordingly follow it in GSTR 9 is what I will say. Do not worry anything about your 8D negative. As long as you can explain 8D negative, nothing to worry about it. Whether the total of table 17, HSN wise should tally with the total supplies, Arvindan's questions. No, answer is no. The HSN wise total, they have their own validations, but you do not have HSN wise reporting for advances. You do not have HSN wise reporting for your 5F. So the internal validations they have is the B2B values that you are reporting should definitely be HSN wise should be matching to that extent. Then Padmanabhan is asking, is there any ITC reversal for SCZ supplies? I don't know. Is there an ITC required for SCZ supplies? No, it's a zero rated supply. So there is no question of reversal of SCZ, ITC. Ravi is asking, what about TDS credit? Ravi, TDS credit is, though we call it as credit, it is kind of a advance cash payment. So it is part of your cash ledger. Yep, we have answered all the questions. In case if anyone wants to ask a question, you can unmute yourself and ask the question. In the meantime, I request Tarun, can you put up your screen? All right. So yeah, there's one question. 6J showing negative value. Madam, you got to know why 6J is showing negative value. If you are reporting a new value between 6B to 6H, if you are reporting a new value which was not there in 3B, then your 6J will be showing negative. So you got to answer why the GST or 3B values are different than this is something you have to answer to it. So please, every total that is coming up, ask a question to yourself why this is coming up. Yeah, that's the only thing. Anyhow, we are still there. We'll take up the questions again after the tech sessions. But now, the important thing which I want to show in tech session is, see friends, if you know pivot tables, VLOOKUPs, SUMIF, unique, filter, sort, DSUM, various things. I will say these are of the past. I will say they are essential. You can boast yourself, hey, I am pro Excel. Answer is no. Macros you are doing, macros are history. If you want to master yourself in Excel, you got to master Power Queries. We call this as M language, M script. Power Queries is the future of the day. It will help you to work faster, integrate data from one file to other file. In today's session, we are going to show you how to collate data from multiple files and correlate yourself. Like if you are preparing P&L account, you have trial balance in multiple, every month there is a multiple pack. Or you have payroll data, April, May, June, July, payroll data, different files. You have to present an MIS to the management. You have GSTR 1, 2, 3, 4 different files downloaded from the government portal. Data is in different files. Just on a quick, you don't need to do a copy paste of all the data, nothing. Tomorrow, anything change happening to that file is automatically taken care. So very essential, we need to know how to handle data with multiple files. So today Tarun is going to walk us through as to how we can work on it. Tarun, over to you.
Hello, sir, audible, sir?
Yeah.
Okay, sir. Today's topic is consolidation of multiple data sets using Excel and Power Query. So, first of all, we need to know that what is data consolidation. Data consolidation is the process of combining of organization data into single data sets. Nothing but we are combining multiple data sets into single data. In order to do this, you need to merge your data sets, append and cleaning and combining them, and all this we have to do. And merging data from multiple data sets requires one or more unique queue identifiers to indicate which records are candidates for merging. So I will show you practically how to consolidate multiple single Excel sheets into one sheet. Now these are the files, working file, dump files. So we are working on these files. First, I will take multiple single set files. I will show you what is the data inside these Excel files. So this is the data for Jan month, and again Feb month.
So ideally, we expect the data should be consistent, because when we are talking about multiple files, the format would be same. If the format is not same, there would be little additional work. Don't worry on it. But 99% of the times, the source data format which is coming is always same. So you can see there is the sales manager, the area he is working, and the period, and there is an amount which is coming from multiple periods. Please proceed.
we will combine this into one sheet. For that, I will open Excel sheet. In this, we have to go data ribbon tab. In this, get data. So in this, from file. So I am taking multiple files. For that, I have to select folder. From folder, I
In
will-
your Excel also, you will find this. If you're not finding, please upgrade to Office 365 or 2016 and above.
so we have to select multiple single sheet.
So
Then-
now I'm trying to get all the data which is there in that folder. We are taking it.
And I will do open. So here navigation pane is open. In this, we have some parameter names, that is content. It is in the form of binary form. There is names, extension names, data accessed, modified, data created, attributes, and folder path. Folder path is nothing but where it is coming from. That. So we will do transform data. So here we can see same names, same. So this is called Power Query editor. We are going to make some changes in this. For that, we doesn't require all these columns. Only we require content and name columns, and I will remove others columns. For that, we have to select this shift control, shift enter like that. So I will click right click and remove other columns. When I click this, it removes other columns and it keeps which are required columns for us. Now here is only content and name columns. Now we will reorder these to this side. Oh, sorry. Now we have to get the data of multiple sets. For that, we need to click on content column, and we need to go add column, and we have to select custom column. When I select custom column, here the pane will open. In that, we have to give name, whatever name you want. I will give us new data set. New data I will give, not set. And here we have to type one function. It's called Excel workbook. And I will select this one and parentheses. And we need to take content column. For that, I will click, double click, and close bracket, and OK. See, here table is coming from binary form. When I click on this, it will show us that here is the data which is present in table columns. Now I will do this new data column. Expand I will do. When I do expand, here we can see that name, data, kind, some of the columns. We have to unclick this, untick, and click OK. When I click this one, here we can see that item, data, these are all columns. In these columns, this item hidden, these are all not required for us. We need only kind column. In this, we have to select sheet or tables. If we select sheet, it will come in the form of sheet. If we select table, it will come in the form of table. So I will select table and click OK. Then I will remove these all columns. This one. And again, I will do expand here. So here we can see that sales are on the area, date, amount. When I click this, here we can see the data coming from multiple data sets. Okay. I will delete content column also and name also. Here is the data.
Let the file name be there.
Okay, sir.
Yeah, because we'll show it
Sure.
somewhere. In fact, friends, whatever we are doing is called ETL. Extracting the data, transforming the data, and we are loading it. Go ahead.
And I will do close and load. So here we can see the data coming from Jan month, Feb month, April. And I have not cleaned this one.
Yeah, one moment, Tarun. Let me just quickly, just for the ease of it, let's know how much data is here. So there are files coming up from this, and let's just quickly, friend, just to show that how this helps. Okay. Let me show you. So we have the values coming from different files, and the total value is whatever, some 28 lakhs or. And ideally, whenever you are working with the numbers, always use comma style so that you know where you are. So 21,82,519. Okay. Just to know whether everything has been loaded, maybe can you open this March file? It is only showing 7,450. So yeah, if you can see, there are only some very small numbers, 7,000. So let me just put Venugopal, South, and this, and let me put 25 lakhs. All right. 2,55,000. So we have added 3 records. So now it is 2,57,450. Okay. Now this, if you see March, please observe carefully. It is 7,450. I am just refreshing this. Just can you see, in just a fraction of seconds, it has become 2 lakh thing. So data is nowhere in this file. In fact, let me just save this file for your reference. And I'll put this as consolidate. Let me just put some outside. So single record consolidated. All right. Now, if you see it in the folder here, each one has a different file size, and your single record consolidated is just 33 KB. So it is not file heavy where those files are embedded in it. No, answer is the data has automatically come into it. Okay. Tarun, can we just load, say, August into it?
Okay, sir. Now I will take this one as an example.
Yeah, makes sense. May just make it as 8. Yeah, so friends, if you notice, there is one more file which has come. Imagine this is your payroll file, sales register, GSTR1 2B, which has come into it. So here, when you come back here, one more file got added. All that I do is just right click and refresh. Can you see it? That one more file data has automatically come, and exactly the value is same like whatever the value it is, right? So the whole of data which is there of August is and July has come in. You can see whatever the value which were there in July is the same number of values we just copied. Those numbers have automatically appeared into the data set. So this way, what are we trying to achieve? Incremental records is automated. Incremental files are automated. If I made a change in the source file, these files also get changed automatically. Hope you are all clear with this. Anyone, any doubts? Okay, we'll go to the next one, Tarun.
And we will go with
By the way, if you are clear with this, can you just type as yes in the chat? You understood, so that I know that everyone are in the same page. Is this clear to everyone? Whatever we have done so far, because it's crucial. I want you to explore. I got one yes. Uma Maheshwar is saying one time in speed. We can actually do. We will do another file, so you'll automatically get the recap. So Ravi, everyone will get a recap. Don't worry. We have done only one file. Good. Tarun, we are in good thing. Please continue.
and we will do now. We will take multiple sheets, not single sheet. I will open 2017 and I will show you. And here is the some sheets. It's Jan month, Feb month, March, April. So we will combine these all years and different sheets into one single data set.
So friends, what we did was a simple thing. Now people asking a recap, please note it. Anyhow, session is recorded. We'll share you the recording. You can watch it slowly. So currently now what you are doing is each file, each sheet, we are taking, merging them into together. Please proceed.
I'll take new and same thing. We have to go data ribbon tab and get data from file and from folder and multiple sheets. Same navigation navigation pane will open. This extensions, data access, date modified, all will be. So we'll do transform data. So same, we don't need these all columns. So I will remove these all columns. And I will do split for splitting this .xls from 2017. For that, I will use one option. It's called a split column. It's in home tab. And I will take by delimiter.
Same like what we do, data extract to column, Alt DE, fixed with a delimiter. I'm just taking delimiter and I'm giving that dot as my delimiter.
And I will select split it at which side we have to split. For that, for my convenience, I am taking rightmost delimiter. So see, it is separated, and now I noted this column also. For that, I am deleting this one. And I will rearrange these columns. Same, we have to go add column, custom column, and again, we have to give a function Excel workbook. And we have to select content and okay. Here, custom columns appear.
Just before you do, friends, if you can notice, on the columns, on the top of it, there is a drop down for 2017-18. But when it comes to when I've loaded the contents, can you see an arrow mark projecting left and right, which means there is a lot of data that can be exploded. So it is right now consolidated. It is yet to be exploded. So when you load it, you will find it. Please do that. So now you can see 2017, I had sheets by name Jan, Feb, March, April. And again, it has some tables. It has some tables. So that is why you can see that explode options that was visible. So automatically data of that has automatically came in. Please proceed.
And here, some columns are not required, and I will remove that columns. For that, first, I will do this. And unrequired columns, item is also not required. I'll delete. And
We are further expanding our tables. You should have used original column name as a header, unless otherwise.
okay, sir. I'm showing as demo, sir. This one,
No problem, no problem. Please continue.
like this columns will come. Now I will close this one, and we require another column, which is called, we have to promote that headers to this main column. For that, I'm taking another new column, custom column, and I'll rename it headers. And I'll go to table. Function name is called table. Table headers. Bot.
When you expand, you can use that also, Tarun. You don't
Okay,
need
sir.
to. What you do is when you expand, just
Okay, sir. Okay. And I will do expand.
yeah, use the original. Tick on that. Use the original column name as the prefix. Check
Okay.
on that.
Okay, sir. This is the data, and I will do here promote as headers. First two as headers. So this is the it comes like this, and it doesn't require this binary column. And again, so we'll go to home tab and close load.
By the if you find that there is customer in between coming annoying, you can always right click this. You think that this query needs to be edited, you can just go back and edit the query. If you can see, there is on the top of the screen next to developer help, there is a table design and there is a query. I can always go back and edit whatever which has been done. And whenever I do that edit, right side you will see these values which are automatically appearing. Like here, you don't want this heading coming called customer, you don't want. So you can just always select and you can set that you can remove these rows. Can you just
Um,
Tarun?
Okay.
No problem. Okay. Other got deleted, Tarun. It should have been reverse. You have retained this and deleted others. And you don't need to worry. You can just delete the last one. You'll automatically go. You just go here in the drop down, remove the customer, and okay.
Hmm.
Close and load. See, it's like see how simple, easy. It's just that you need to now master. You have to just make your hands dirt and start using it. It will you will get it. It's like it takes time, but you will get it. It's not complicated. Tarun, it's 5:30. Can we also look at? Do you have the PDF thing? Is it possible?
Yes, sir. We have PDF. I
Yeah,
will
can
do.
we go to the PDF one? So friends, we have seen single file, single sheets in multiple folders, and one Excel file having multiple sheets, multiple folder, multiple files. We have tried to merge thing. Now the beauty of it, you might get bank statements or something in the PDF. Can we just go and get the data from PDF files?
From PDF.
Many of us have not explored this. I definitely want you to explore the PDF files.
I'm selecting this. And I will select only one folder. Sorry, sir. I'll take one. When we open PDF folder, and it shows tables and pages at same time. So we will select folder name and transform data.
Always try transforming data. That's what I said. ETL, extract, transform, and then load.
Here we will select only page or table. So I will go with pages. As you wish, you can select any one. And we are filtering the data. And then I will delete these columns. And I will expand this table now. And click OK. Here we can see that PDF file which is coming, it will come like this. So we need to make some transformations, cleaning on. I will do change type, transform, no, I will do fill down. So here we can see that pages will come in 1112. And these columns are not required columns. Okay. Some of the data is present in these columns. Only this. And I will just promote these columns as header. If you want to split these data, we can split these also. I will rename these columns as a bank name, banks. And this is firms. I'll rename as firms. And this is financial year. And these are required columns. And I will delete this page one also. And click load. Okay. This is how data is coming from PDF.
So automatically the data got extracted from PDF. So which means there's a native capability built in the Excel to handle things beyond or much more than what we are currently doing it.
And that's it. We can transform this into pivot tables as you wish, whatever you want, we can do. Sir, completed.
Yeah. So that's firstly great. Friends, any questions to anyone? I'm sure some of you might be got the concept, did not get it fully. Don't worry. You got like this session thing that like a Google. So you now got an access to how to handle it, how to try it on. That's all I'll say, try it on. And in fact, in the next session, we are going to show you without any code, how the data from Excel can be pushed to Tally with the new features that have come and other things we are going to come up in the next session in a very, very beautiful session. Any questions to anyone so far, which it could be on the GSTR 9 or the tech related? Anyone wants to ask any question? You can unmute yourself and ask the question. All right, I think we have come to end of today's presentation, and I should definitely thank a couple of people, Stephen, for coordinating and putting up all the session. Jagdish for beautifully taking us through GSTR 9 and 9C. Tarun always enriching us with more power queries and power functions. Thank you, all the three of you. And special thanks to participants who have engaged everyone and including me by asking questions. And every time I make this statement that you are here to learn something, take back value, and I'm here to take more value than you because for preparing the session and looking at after the sessions, handling the questions. We'll be sharing you the record and you'll get a feedback link. Feel free to give the feedback, letting us know what else you want to have the sessions and which we'll be considering in our upcoming session. And it's been our endeavor from 6 years. We've been doing every month one session. So constantly to update the knowledge of our participants, right? There's one question, Santosh, if the format is different, how to consolidate? Santosh, answer is yes, it is possible. So you need to do multiple steps. Format 1 for like you are taking the data from format 1, format 2, format 3, loading it into, say, let's say one file, which is into 3 sheets. The next activity is merge all the 3. So which means you will be doing the multiple steps and combining them. Once you have done, every time the data is going into that, it will automatically come up. And the best way to do it is figure out, get the data. And we are also here to help you if things are not working out. Feel free to reach to us. Yeah. On this note, I thank every one of you for being a lovely participants and wish you all Merry Christmas and Happy New Year. And I'm sure the annual returns are keeping us busy. Do file the returns. Do not like waste time in thinking that I don't know and file late. Penalties are huge and it will unnecessarily attract a system generated notices. Let's try to do it. Feel free to contact anytime between now to 31st. If you have any question on GSTR 99C, our contacts are already there with you. Thank you, everyone. Thank you. Good day.